Hey guys, Matt Snyder, Mortgage Insider here with Matt's Mortgage Tips. This video is part of a series that I'm doing on tips to improve your credit. If you find the content useful, please like and subscribe. Today's video, we're going to be talking about how to manage your revolving accounts to maximize your credit score. So what is a revolving line of credit? Think of it as an open line of credit. An installment account is one where you've got a set balance. Say you purchased a car for $20,000 and you're going to pay it back over 5 years. That would be an installment account. A revolving line of credit is what most of your credit cards are a revolving line of credit. Say you have a credit card with a $3,000 limit. You can spend $3,000, but as soon as you pay it back down, you have that available credit again. So that's just an open line. You can use it, pay it down, reuse it again. Number one, be selective. While it can be very tempting and a lot of stores have great promotions for card holders, you want to be really selective about the revolving accounts that you open. Department store credit cards don't hold the same weight as a traditional bank credit card, and then a lot of times they don't give you as high of an available credit limit as well. While they might give you some good promotions or discounts on merchandise, or maybe even a 0% period, be really careful. Make sure you're doing a lot of research before you open a line of credit. Never open one just in the heat of the moment. They ask you when you're at the register if you want to open a line of credit because of some promotion that's going on. And also, when you're opening a revolving line of credit, think about what your goal is. Are you trying to get the best rewards that are available? Are you looking for a 0% card for a period of time because you know you need to make a purchase that you're going to pay off quickly? Are you looking for a card that's got a good rate when you do a balance transfer? If you know that goal when you start looking for a card, then you can do your research. Some great sites for that are going to be Credit Karma, or NerdWallet's a really good one where you can actually look at different credit cards that are available side by side. Tip 2, keep your accounts open. Now this is going to help you in two different ways. Number one, it's going to help you with the age of the credit that's on your profile. So one of the factors that goes into equating your credit score is the age of your accounts. So if you've got a bunch of small credit cards that have only been open for a short amount of time, that can negatively impact you. Now, if you have a fairly young credit file anyway, that's not going to matter as much. But if you have an older file that has more history, you don't want to all of a sudden start opening just random small credit cards that are going to impact the history that's on your credit file. One other benefit to keeping those accounts open is that available credit also stays with you. So even if you're not using that card anymore, you paid it off, it served its purpose. Let's say it's a $3,000 card. Well, if you close it, that takes away the $3,000 available credit from your total available credit, and your available credit plays a big part into your credit score. And that's actually going to bring us to tip number 3, which is keeping your balances low. So 30% of your credit score has to do with the balances that are on your credit cards. If you can keep your balance under 30% of your available credit, that's kind of like the magic number. So it counts as 30%. You want to keep it under 30%. But actually, also some of the scoring models that we use in the mortgage industry, we see we're getting it down to 25 or even 24.5% can help even more. So keep those balances low. If you're like me and you like to use a credit card to get rewards and then pay it off each month, just know that there's some risk doing that. It could impact your score a little bit if you're using more than 30% of your balance. Now, if you're really slick, you can kind of time it just right. If you know when that credit card reports to the credit bureau and you can pay it off in full before it reports, you can use more of that available credit. But I would say if you know you've got a purchase upcoming, go ahead and get that thing paid down and don't use that card for rewards for that month. Just use cash, or just use your debit card, that kind of thing. So that's 3 quick tips on managing your revolving accounts to maximize your credit. There's a lot of things that you can do to manage your credit, improve it, build it. I would love to help you in that process. If you have questions involving credit, involving mortgages, real estate, please feel free to reach out. All my contact information is in the description below. I'd love to help you. Have a blessed day.